Alright guys, welcome back to the channel, and today I want to share an extremely interesting theory on why I think that Disney stock, Netflix stock, and FUBO stock are absolutely related here. Not only on their stock pattern, but also fundamentally they have something very much linking the three companies. Now all three of these have seen a downturn in the last week, and you might have heard that Netflix earnings actually came out very negative. So again guys, I want to share how these three companies are related, and I'm going to be starting with Disney here, Disney and Netflix. And one of the main relations between these two companies is going to be that they jumped into the streaming industry, or well, Netflix is basically the leader in the streaming industry, but Disney is going to be a very close top 5 or top 10 in this industry. So they definitely have a large hand in the cookie jar, and a lot of investors are much hyped on this company, not because of their parks or because of some other stuff they've been doing, but really because of this streaming service. And that can be seen back with the jumps we had in December and in February of 2021, where we did see some massive jumping on this stock and where we were getting some new news about the streaming services. But right now with Walt Disney Company, you can see that they are massively paused, sitting at a level of around 182. And just a few days ago, they did get a great sell-off. I didn't play any puts or mention this in the Discord, guys. But as always, if you were watching Walt Disney, one of the stocks that we trade here on the channel, you might have seen this as a great opportunity to basically play a sympathy play, which is something that I talk about very often, and similar to the play we did with AMD and Nvidia. When Nvidia was moving to the upside, we traded also AMD to the upside, because for the most part, when one stock in that sector moves, a lot of them like to move in the same way. And that is why Walt Disney or Disney stock is going to be massively related to Netflix. We know that a lot of investors who joined Disney stock recently or in the last few months are looking at this streaming service as a massive potential place for Disney to find some new growth. So again, guys, that's one of the main reasons why they are related. But looking here at Netflix, again, like I said, guys, they did not have a very good earnings at all. And they honestly sold off after, which I'm going to show you right now. You can see that they sold off from $550 all the way to $500 flat a share. So again, guys, this was a loss of almost 10% on their stock. And even today, after a massive recovery, you can see that we are still down 6%. Now, I don't invest long-term on Netflix because I think that streaming is a service that is getting very, very flooded with competitors and a lot of other people in the market. But for the most part, Netflix is a safe company that you can look at to get an idea on what's happening in the streaming world. And they did not have a good earnings, but not only based on what they made on revenue or anything like that, but on their new user growth, which is something that people love to look at with these streaming companies, because it means that there is a lot more potential in the future for more users to come in and there's more people adopting their platform. But with Netflix, that number was down, and also just general users was also down from the last quarter. So again, guys, this is not going to be something very great, but it is something that we can take in consideration with Disney and with FUBO, which I'm going to talk about right now. Now with FUBO, guys, this is a stock that focuses on streaming sports, so really not into this specific niche like Disney or like Netflix, where they focus on home movies or home entertainment for families or basically for adults. But with FUBO, they focus exclusively on sports, and this is a company that has been taking a massive beating really on the backs of their last earnings, and the stock market has rotated to basically hating on these companies that have negative earnings. And instead of going in with companies like FUBO, Palantir, etc., a lot more people are focusing on companies that are positive earnings, like the ones I talked about in my community post just today, like UPS, McDonald's, etc., where the companies consistently grow every single earnings. But looking here at FUBO, guys, with my longer term position of this company, I do have some shares at around $20 a share, $25 a share, and soon I will be adding at around 15 if we do get down to that level. Now, hopefully we don't, because that is a very bleak scenario for FUBO. But if we do get down to 15, I think that this will ultimately be the level where the stock either consolidates, or at the minimum we see a small bounce that I can take profits on, or maybe turn my position to zeros and get out of it, because unfortunately FUBO is not catching the bid right now like I want. And even though they do have massive volume on a daily basis, the stock has not been able to turn around. So there is some sort of manipulation here happening on this stock, probably from institutions or any sort of other bigger investors. But as you can see, it's not very good for a retail investor like myself or people who are trying to make money with this stock in the short term. Now, guys, looking at these three companies, what do I think is going to happen in the future? Like I said with FUBO, I think they will break down to around 15 and then see a bounce. with Walt Disney, you can see that we are holding very well around this 182 level. I wouldn't be surprised if we did see a breakdown to this next support level of 170. But as always, guys, every time that I have said Disney might drop, I have been absolutely wrong. So I wouldn't be surprised if this stock was extra resilient at the 182 level and saw a bounce even up to new highs at around 200, which is what a lot of these other stocks on the market are doing right now. And I'm talking about Neo, Apple, etc. They're ready to bounce, and even though they are at these lower levels, they're showing us some resilience, like Neo, where they can't break out of this wedge yet. They're holding up and holding up, and you can see that they're even up $1 on the day. So that's very good sign. The SPY is up as well today, even though there was a drop. And also Apple is staying around 1% of the opening price. So this is also very good news for the market. Even though we are in a bearish context, today we did get a great day. So I wouldn't be surprised if Disney could bounce, or if we could see a run on a lot of these names like Netflix, Disney, or FUBO, because they are very beat down compared to the levels that they were just a few months ago. And a lot of these are some great growing companies, so there are some potential trades to be made. So again, guys, as always, I hope you enjoyed the video. Don't forget to like and subscribe down below if you learned something new. Check out the links in the description for not only my free Discord, where I mention my daily plays and signals, but also for the TradingView link, which is going to be the platform you're seeing me do this analysis on today. And one of the main reasons why I can notice these trends and patterns, if I didn't see these charts on a daily basis, I wouldn't have any type of touch with the market or any know-how on what would be happening with these companies. So as always, guys, this is a vital tool for any trader, and it is absolutely free through the link in my description. But as always, guys, I hope you enjoyed the video, and I hope all your plays are in the green.